Yes. The question is, are we out of the woods? And how do we make money from it? Wouldn't you like to know? So, right now, the market is up. Why is it up? The market is up because we have a deal with China. Well, we're discussing and we have an agreement and we haven't signed anything where we're talking. But the point is that we are ratcheting it down, which is a good thing. You want to ratchet down. You want things to go well. And it's working because the market is reacting to it, right? So on one end, that's a good thing. So are we out of the woods? Well, hold on. First of all, you need to realize that since April 8th, when we were all talking and wondering and thinking, what has been happening? What has been happening is there was a loss of confidence. Yeah, but that's just people talking. Well, hold on. Not necessarily. What's happening is you have a drop of between 30 and 40% in terms of the actual people coming from the US, from Canada and the US. Who cares? I mean, they're coming here, they're not coming here. How is that impacting me? Well, if you are in the hotel industry and the restaurant industry, that will impact you. We haven't seen the hard data yet. So far, it's been the soft data. And the hard data from first quarter has been pretty good. But now we're going to see this permeate through the financials for the second quarter. The fact is, there's been a drop of 30 to 40% in people arriving from Europe and Canada into the US. Just want to remind everyone that the entertainment and the leisure industry is 10% of GDP. Is this going to be a big thing? We shall find out, but you will need to understand all these things take time to walk through unless making a deal. All these things are making their way through the system and eventually it's going to hit. Fine. So we've got this thing taken care of, right? So don't forget, we still have a bunch of deals that needs to be made for all 100 companies, all hundreds countries, right? Because we all need to make deals with them. The one with the UK was kind of a non-starter in the sense that we export to them more than we import, so we're net exporter. So that's not what you wanted. You wanted to see the China, and you saw the China deal. Obviously, they can't do without us. We can't do without them. It's a very close knit discussion, but you need to understand what's really at stake here, right? Why are we doing all this? Well, we're doing this because the US needs to reclaim its status. The dollar needs to remain a reserve currency. The treasuries, the $37 trillion, need to be paid or be handled, and we need demand for that treasury. That is important. That's the idea behind the Fortress America or the Golden Age, bringing it all back into the U.S. Now, obviously, he's talking in terms that everyone could understand, but at the end of the day, what we're looking for is we are looking for the dollar to remain number one. Because if the world does not want dollars anymore, either because they don't like us or because they don't need us, then they're not going to want your treasuries. And if they don't want the treasuries, then you won't be able to refinance them. Now, of course, we could say, well, couldn't you just keep it the way it was? It was just fine. No, it was not sustainable. Okay. We can't keep borrowing and borrowing from all the entire world. Don't forget, out of $37 trillion, quite a bit come from non-US, about 8 to 9 to 10 trillion dollars. So you can't keep borrowing from these people and then take the money and then spend on their products. Sure, you're making them rich. Sure, you have lots of nice things, but there's a cost to that. In the meantime, what we're trying to do is, well, let's just cut off the export, right? Let's just cut China, cut everyone. But you can't do that either because you depend on them for trades. You depend on China for lots of trades. Forget the import and the export business. You need to still be able to interact with the world. But yet you can't do it on the basis of you just issuing IOUs, because then all that is left for the government to do is really two things. And this is where we have to be careful. You have to be careful because that is always a possibility. The first one is we've done it before, quantitative easing. Basically, what the Fed is going to do is going to basically drink its own Kool-Aid, issue print papers and just buy it back with your own money. That unfortunately is very inflationary and is not good for the dollar. But they've done it before, and out of the 37 trillion, the government owns about 27 trillion of that debt in some weird kind of way, which I won't go into detail. But the other thing is, and this is where a black swan event, I hope we don't talk about it. We shouldn't even be talking about it, okay? And I hope that the government doesn't even mention it and talk about it. We don't repay the debt. Of course, that's ridiculous. Why would you even say something like that? Why would you even mention it? Well, I mean, we did mention we're going to acquire Canada, and that went out just fine. So be careful. We also taxed 100 countries. So be careful. That could happen as well. So today was an interesting day because obviously we got some more news. And the news that we got is having to do with inflation. So let's find out what's going on with inflation, right? So as you could see, CPI came out today at 8:30 in the morning, and it is up 0.2%, but it's below the expectation. Stock market strengthening as CPI shows lowest 12-month inflation since 2021. So what does that mean? Well, it basically means that we have inflation under control. That means that, therefore, we can lower rates. And of course, there's a whole discussion going on with our friend Powell, who might not necessarily be inclined in doing it, which now the pressure is going to be on him. And I'm sure Trump has said many bad things about him. He's going to pounce on him again on that. He says, "What are you waiting for?" Maybe he doesn't like him. Well, we know that Trump doesn't like Powell, but vice versa. Maybe he's just saying, as he said recently, I don't know. In fact, I did a video on that. I don't know what's that. I don't know. I need to see the results of the tariff. The problem is, if that's your way to go about it, if you're going to wait until you hear about the tariffs, do you know how many months you're going to have to wait? I mean, April 8th, right? Uh, so that we start talking about the tariff, and then Liberation Day was early April, early May, nothing. That's 30 days. We're talking about almost 50 days now without anything. And yes, we have kind of a deal with China. That's two. What about Europe? Because Europe is having lots of issues right now to communicate. In fact, Trump just said recently that Europe is worse than China now. Come on, leave them alone. There's 27 of them. They all have to agree. That's going to take forever. So basically, what we have is inflation seems to be under control. So therefore, we should lower rates. That's where the market is going up. But is inflation truly under control? Why am I saying that? Well, the reason I'm saying that is because how do you know what is inflation? Well, you look at the CPI. What is the CPI? The CPI is this made up number of a bunch of boxes of goods that the Fed is using. Now you have to understand that in the 80s and the 90s, the CPI is different from the CPIs today. If you were to use the same number that we've been using in the 80s, that CPI will be much higher. And in fact, yourself as a consumer, you could see it. You could see that things are much more expensive than they used to be. So what am I doing? It's things are more expensive, right? But yet we're showing 0.2%. Now let me show you another number. Get ready. This one is interesting. Let me show you. Let me show you these guys. Possibly because my picture is in front of me, but look at this. So this is and Trueflation basically uses all millions of points of data to actually capture what actual inflation is in the U.S., not just the points that we've been using for the CPI. This is probably a truer representation of what's really going on the ground. And as you could see on the ground, you see this? Look at that spike here. Well, you have to see some sort of inflation. You have to see it. Why? Well, because the tariffs have started to kick in to some extent, or the expectation of the tariffs. So if you think that prices are going to go up, right, what do? Well, you buy lots of the stuff ahead of time. So that's pushing prices up. So you're going to have higher inflation. When I see the market telling me that we should go up because inflation is under control, I said, be careful. How can inflation be under control? It has to be higher. Why? Because the tariffs are going to come in. We're not doing away with the tariffs. We're not doing away with the tariffs. We are staying with the tariffs. We want we I don't know if we need or we want them, but the point is that you still ended up between at least with 10 to 30% with China, the same amount with the UK. So they're not going away. So my friends, you're going to have inflation. So therefore, be careful when you see the stock market going higher and higher and higher and higher on basis on inflation, because that might be sustainable. That might not be sustainable. Okay. So what else is going on? Well, let me show you what else is going on. Let me show you the damage. But before I do that, I wanted to make sure that because we have to pay the bill and keep the lights on. I want to make sure that you are aware of my Patreon channel, and I want you to join the Patreon channel. Why do I want you to use the Patreon channel? Because I post things every day, right? Look at this. Every day I post, I give you my thoughts in the morning. I have several, as you could see, these are all the topics. These are the post. I have collections. I talk about the treasury. I talk the currency. I talk about stocks like SQQQ if you want to make money when the market goes down. ETF bearish on Tesla. Tesla bull. Root stories. Root's a very good company. Gendex Holding, which is great. Miller Industries. IWN story, GCT story, VMC story. So all the stocks that I'm following, I am basically telling you about them ahead of everyone. So join the channel, the Patreon channel. It is free, and don't forget to subscribe, obviously, if you're listening as well. Okay. So let me show you this screen, which is quite interesting because it shows you, what's going on in the world. What is going on in the world? Let me show you what's going on in the world. This is what's going on in the world. As you could see, if you look at the stock market, if you look at the indices, and you look at year to date, Spain, Dutch, Italy, Hong Kong, 18%, 18%, 17%, 15%. Ibuprofen, small, the euro, 59.6 side points. Well, hold on, we're missing someone. Who are we missing? Who are we missing? Right? Exactly. As we go down, so this is the year to date. This is year to date. As you could see, the US is here, minus 0.5% for the US 500. Now, take a look at this screen for a second. You see the top performing indices in the world. I know the market is up in the US, but what's really going on globally? Well, globally, year to date, the US is not there. And this is where you have to be careful because it could be a representation of the future. And if this is the future, and of course you could say, well, this is because of the tariffs and you scared everyone away. Okay. But if investors sees this, maybe you should start looking into buying European stocks. Look at this, 18%, 18%, 19%, 17% in Italy. And of course, you say, well, let me buy it now. No, you want to buy when nobody else is buying, so it's a little bit too late. The question that you have right now is what you should decide is, do I want to bet on the US or not? Because right now we're at 0.5%. And the answer is this. Um, you have to bet on the US. Why? Because there's not real alternatives. You really can't do without the US at this point. Where you're going to go with China? I mean, Europe is okay, but frankly, not that okay. China, yes, of course, but the system itself is not the most efficient, is not the safest for everyone. So therefore, you need to realize that it is a little bit more complicated than that. You want to be able to do it. And for you to do it and make money in the stock market, you need to buy when everybody else is selling. And right now, you should be buying US because it's very cheap. As long as you know for a fact that they will deal with the debt appropriately, that the dollar will remain a powerful entity. But if that is not the case, then, my friends, then you have to be careful. Now, how could you make money in this market? Well, it's going to be very difficult because it all depends on what the US administration is going to do. And that is always a problem. So, are we out of the woods? No, we're not out of the woods. Remember, this country has a $37 trillion debt problem. And right now, as a bonus, we are going to lower taxes. So that's great. Thank you very much. Well, hold a second. You're going to lower taxes. That could add between 5 to 9 trillion, right? Because you're lowering the taxes. How are you going to pay for the taxes? You got to cut somewhere. Going to cut Medicaid, Medicare? I don't know. So it's like that, right? And the market hates the situation. Now, of course, as you, as one of my subscribers, you need to realize two things. Well, you need to understand the stock market. By now, you should be doing quite well. But you also need to realize your personal livelihood. Are we going to be entering a period of recession? Because at the end of the day, there is quite a amount of pressure building on. Why? Well, we look, the confidence might be gone. Look alone what's happening with travel into the US. The arrivals are down. Um, is that going to continue? Now, of course, only 10% of the GDP, but keep in mind that with that level of interest rate, we need to do something. We need to lower rates. Now, the question is if the Fed starts to lowering rates too soon, they're going to say, oh, so you are concerned about the economy, aren't you? You can't win. So this balancing act that's going on throughout the world is very delicate. And of course, the last thing you need is Trump coming in and just shaking things up that much. Of course, you shake things up to make things better, but you need to understand what you're shaking. And how could you possibly understand all and every single ramification of the US economy and of the world literally? And that's the question. So to answer your question, are we out of the woods yet? No, we are not.